Hi everyone. As you guys know, the market's been selling off recently, and I wanted to give some thoughts and ideas on when the market might bottom. So as you guys can see, we had a really bearish day on Friday, gap down today. This setup does often produce an interim low, and it does appear to have produced one. So for a kind of dead cat bounce, I'd be looking for something about 11% off the low, just about half of its recent decline. And now every permanent low starts as an interim low, and I think the key is to think about what makes this permanent. So if I'm to show you the 2020 example, as you can see, a large part of this low was simply the Fed pivot. They cut interest rates to zero and launched a massive QE program. Now they did that on the 15th, and if you can see, the market bottomed in 2020 a little bit after, on the 23rd. So I think one of the keys really is the Fed pivot. Now there's a similar example in 2018, and essentially the market was selling off and it hit an interim low. It probably would have continued selling off, but why the interim low became permanent, I would believe it's because on January 4th, the Fed essentially turned dovish. So what we're looking for this interim low to become a bottom really is the Fed just changing their tune. Now, another thing that could happen, because this sell-off is largely caused by tariffs, is that rather than the further escalation we've been seeing, we see major deals being made. And I'm not talking about a deal with Vietnam or anything. I'm talking about between US and China most specifically. So yeah, either a Trump pivot or Fed pivot. But until then, this interim low is not that reliable, and it'll likely break if neither happens. One thing that I want to note is, as you guys can see with these yields, a lot of people have been saying that, the market crashing has allowed the yield to come down, and that will allow the Fed to cut. But with today's move and, the yield being pretty high, it just doesn't seem that likely. So that being said, it doesn't look like inflation's going to taper down. Inflation and recession, it's hard to say whether or not the Fed's going to cut because, the Fed has a dual mandate, full employment and low inflation. So if they're challenged on that front, they might figure something out. But for now, I think it's more important to wait for the Trump pivot, because it does seem from Powell's recent talks, he's unlikely to pivot unless the market throws an even greater tantrum. Some stocks I like, one of them would be Hydrate. I made a video on this before, but essentially, this is kind of like the Shopify of HIMS, where they're essentially just enabling companies to go direct to consumer. A lot of medium-sized brick and mortar do not have the infrastructure. They don't meet the legal requirements to go direct to consumer, so Hydrate empowers them to do that. This company, one of the reasons I like it, especially now, is because they operate in the US. Everything's in the US. So they're tariff proof, and with it being a pharmaceutical style kind of thing with telemed, they are also recession proof. Another stock I like is HIMS. HIMS, once again, tariff proof and recession proof. I made a video on HIMS as well. I do believe that it can go lower, but I think the best way to play this is just to sell puts on it. So yeah. Another stock I really like is P6, and P6 has seen pretty bad action recently because they're pretty exposed to Chinese exports and stuff like that. So with that being said, just with all their parts coming from China, they could be affected, although their primary business, which is the power systems and selling stuff like backup generators, I'm pretty sure all their competition, like CAT, also have China exposure, so I don't think that they lose too much of their advantage here. I think that the selling off does make sense given the uncertainty, but I think ultimately the business will be fine and it'll prevail. And just on a trailing 12 months earning basis, it's trading at less than 7. So it's pretty cheap for the potential it has, and a lot of concerns that are negatively impacting the price will definitely be gone by the end of the year. Another stock I really like, and I mentioned this in a couple of videos, is NextVision. So Next Vision is cameras for drones. As you know, with any military company, they're not really cyclical, so a recession doesn't matter. And this company is an Israel company that sells most of its stuff in Europe. So tariffs should not be too much of an issue. And there have been talks of Israel and US making a deal. So with that being said, as you guys know, Israel is the greatest ally of America. So I really think that this is basically tariff and recession proof. But yeah, this one has actually been holding up fairly well, giving us high beta. And I think this is still a really good pick. Another stock I really like is Valera. This is an oil and gas company. As you guys can see, it's had a very significant correction in the past 4 days, as with a lot of other energy companies. But essentially, why I like Valera is because their management has proven to be really good. They've created a lot of value. And this company is one of the best positioned oil and gas companies. They have a huge cash balance, making up roughly half their market cap. They've been printing money, and they're not too vulnerable to low oil prices compared to other companies. Like, I know all companies in this industry are going to have troubles when oil drops, but I think this one's best positioned. And honestly, I think with their massive cash balance, low oil prices actually might allow them to make really, really good acquisitions that in turn make them more attractive in the future. But yeah, essentially, if we see $50 Brent, obviously this is going to go into the toilet. But I think, you don't have to be too concerned about super, super low oil prices. And I think this is a really good pick, ultimately speaking. But yeah, that's all. Thank you guys.